Friday Coffee, the Mortgage Man Eric. Here we go. Today we're going to talk about why you don't want to be using the big banks, the FDICs as they are known, for your mortgage lending. The people that are taking your money for checking and savings deposits, right? You don't want to be using them for your mortgage loans. And there's a plethora of reasons. I bullet pointed 6, 7 of them. We're going to go through them quickly, try to keep the video short. Trying to keep the video short. That's a joke with me, isn't it now? Here's Johnny. Number 1, they're not licensed. Hello, wave the red flag alert. They're not licensed. Why aren't they licensed back in 2010 when they passed the SAFE Act in an attempt to clean up the mortgage industry? What needed to be done? Yes, the lovely politicians, where the big banks are in the pockets of the politicians, and it doesn't matter which side of the aisle they're on. The big banks are in every politician's pocket, made a deal that said the big banks, the FDICs, are exempt. Believe it or not, you'd think it'd be iron. It's kind of ironic, right? You think it'd be backwards. No, they don't have to be licensed. So when the rest of the industry, the mortgage industry, is getting cleaned up, as you will, having to get re-educated, licensed, bonded, insured, passed a state test, a federal test, an FBI background test, and a fingerprint card, the FDIC loan officers, which they're not, they're just customer service reps, glorified if you will, don't have to go through any of that. So interestingly enough, when we saw that happening back in 2010, and the people that we saw that couldn't pass the background check because of a felony, or couldn't pass the state or federal test, were ironically going over to a big bank and getting hired there where the standards are much lower. Isn't that awesome? Doesn't that make you feel more comforting now on who's handling your loan? Well, they got my checking and savings accounts there. It should be easier for them to do. No, it's not. You're dealing with a much lower level of service in many capacities, and that's just one, right? How many times did you walk into a big bank like a Wells Fargo and you see a 20-year-old kid there in a pink tie? That's your mortgage advisor. That's not there 3 weeks from the day when your loan is going on, right? Think about that. Number 2, they can't close in 30 days. Heck, they can't even close in 40 or 45 days, most of them. And in Arizona, where the market is aggressive, you need to close quick. You want that offer? You're making an offer on 350 and under? Man, you better have your ducks in a row if you want to win the offer. And you better have a lender that can perform. And performing is not a 45-day close of escrow, my friend. It's 25. And I'll tell you what. Go to any credit union or bank. They may tell you they're going to do it, but guess what's going to happen? You're going to need an extension if they even can close the loan at all. And that's why listing agents are reluctant, which we'll talk about that in a second. Only 2 ahead of myself. It's another bullet point. Moving on. Number 3. Another reason why you don't want to use the big banks, the FDICs, for your mortgage lending is you're going to talk to a plethora of people. You don't have a liaison or a point person, a mortgage professional that takes care of your biz from A to Z. Doesn't happen. It's Carol, and it's Bonnie, and then it's Johnny, and then it's somebody in St. Louis, and then it's California, and then it's New Jersey, and your head is spinning because each of them have asked you for the same thing, and now you're pissed off. You said the same thing 4 times to 3 different people, right? That happens. Welcome to the big show, as they call it, the big banks. Moving on. Number 4, they're not local underwriting. Just because you walk into the bank down there in the corner of 42nd Street and Thomas or whatever it is, because that's where you do your banking at, doesn't mean your file's getting underwritten there. Nope. On the contrary, my friend, it's being sent off to some centralized processing and underwriting unit, typically in the middle of the United States. Doesn't that make you feel really good that you've got an underwriter sitting in St. Louis that is underwriting a property in Apache Junction, and they have no idea of how the market is out here, right? And you have this, and you got problems then with the appraisers, right? The appraisers, it's a Wells Fargo appraiser, right? And We already have seen issues with that going sideways because they're not familiarized with the market here locally. Moving on, number 5 is your loan advisor, because he's not a loan originator. He's not a mortgage licensed loan officer. He's not, or she's not. It's a mortgage advisor, which basically means I wear a pink tie and I'm going to be fired in 4 weeks. So is your mortgage advisor going to be calling you back or talking to your agents in the evenings and the weekends, which is typically when you need the most help? That's when you need to run numbers. That's when your buyer's agent or the listing agent would like to call and talk to you about the transaction or about the offer. Nope, not going to happen. So who's in your corner? A mortgage advisor that's probably not going to be there in 4 weeks from today because it's a big bank and you got your checking and savings accounts there? Please take that into consideration. Moving on, number 6, the PQF or the pre-qual form and the LSU loan status update. These 2 forms, follow me here. These 2 forms are not the pre-approval letter. When do I get the pre-approval letter? Look, Arizona does things differently. Listen. Arizona does things differently. They don't use a regular good old pre-approval letter with a nice header at the top from your bank. They need a pre-qualification form, which is it is listed in the contract. It is part of your offer and contract. And what happens is your big bank FDICs have no idea what this is because they're based out of Kansas somewhere. Huachichuchi County Federal Credit Union in Colby, Kansas. Or Bank of America call center coming out of India, right? They have no idea what a PQF pre-qualification form is. 3 days later into it, you finally get somebody that calls you back. Well, we don't have that form. I know you don't have the form. We had to deal with this baloney before, but we need the form. It has to be in the file for compliance sake per the AAR, Arizona Association of Realtors. And guess what happens? They fight tooth and nail. The listing agent's getting pissed. The buyer's agent's getting pissed. I can't get a call back from Bonnie over at Bank of America, and I can't get what I need. They're not going to give me the pre-qual form. There is that. That happens. Some banks will fill it out, and some will just take the stance. We don't do it. Our attorneys have told us that we're not supposed to fill it out. Great. So now you have placed this consumer, the buyer, in a predicament because the listing agent and buyer's agent are now out of compliant with the purchase contract per AAR, and some of their brokers that they work for will not allow them to get a commission until the file is compliant. Follow me here. So this is why, moving on to the next item, when you use a big bank, which is number 7, by the way, when you use a big bank and FDIC vendor, you reduce your chances on getting your offer accepted. Well, why? It doesn't make any sense. It's Wells Fargo, it's B of A, it's USAA Federal Credit Union. You reduce your chances because the listing agent's been around the block. They know they're going to be fighting like hell to get those forms, if they even get those forms, and then, they got fired, and now they got to talk to somebody else, and they can never get an update, and when was the appraisal ordered? The listing agent doesn't want to deal with that malarkey. They just don't. They would prefer to accept an offer by a buyer that's paying in cash, obviously, but if it's not paying in cash, by a buyer that is being represented by a local direct mortgage lender that they can call on a 3 p.m. on Saturday and get an update. They get the pre-qualification forms. They get the loan status updates per the real estate purchase contract. They're kept in compliance. They're kept in the loop. They close in time in 25 days, and everybody goes off into the sunset happily ever after. That's not going to happen with your FDIC institutions. Now, with that being said, if you're the only offer on the table, right? Then your only offer on the table, they'll probably accept the offer. But if you're with Wells Fargo, they got another offer coming in that's the same dollar amount on the offer, and that other offer is being represented by a local direct mortgage lender, guess who they're taking? That's a no-brainer. if you can just please get that out of these bullet points. Man, we're at 10 minutes already. Last item, number 8. Here's another reason why you don't use the FDIC big banks is because they can't do any of the specialty programs. Well, I don't need a specialty program. Maybe you don't, but there's a lot of people that do. What are specialty programs? Specialty programs are down payment assistance programs. Home and 5, Home Plus, Pima County, Tucson, IDA program, P2P, Pathway to Purchase, reverse mortgages, bank statement loans, 1 day out of short sale foreclosure loans, Section 184 tribal loans, foreign national loans, manual FHA and VA underwriting loans, and more we could think of. They don't do them. The FDIC banks will not do them. Yet another reason why our realtor partners cringe when they hear you want to use B of A. Oh, good night, Irene. And look, they can't steer you, and they won't steer you because they're professionals. They will give you a referral, but trust me, they already know the uphill battle it's going to be if you are adamant and obstinate on using an FDIC big bank or just a regular FDIC, Watuchi Credit Union out of the middle of Kansas, right? It's an FDIC bank. Oh my God, they're going to pull their hair out. Look, it is what it is. I don't like big banks, and I cannot lie. There are no agents that would deny. Peace out.